Good morning and welcome everyone to our session, Blockchain's Role in Real-Time Payment Systems. My name is Shawn Raay, and I am the Chief Information Officer here at Payments Canada. And I am pleased today to be the moderator for the session. Blockchain is introducing a shift in the way global payments are settled. Well, over the past 5 years, the consumer experience has improved markedly in many countries. Below the hood, often the underlying settlement and clearing processes continue to use traditional and conventional methods. The ability to decentralize how payments are cleared, posted, and settled is attracting the interest of real-time payment systems from around the world. Today, I am pleased to be joined by Muneeb Shah, Head of Payment Strategy at R3. Muneeb is exploring blockchain's next step, connecting domestic real-time payments around the world. Since we only have 45 minutes, we're going to jump right into our introductions and discussions. But we'll save some time at the end to answer your questions. Again, please use the Ask the Speaker box on the right side of your screen, and we'll try to cover as many as possible. So before we begin and we turn to the discussion, Muneeb, can you maybe tell us a little bit more about your career journey and how you ended up in payments?
Sure. Thanks for having me on the panel today, Shawn. So I started my career with payments, in fact, right? So I started with HSBC. Never thought in my wildest dreams that I'll be starting as a COBOL programmer. Always thought that, COBOL is outdated and nobody's going to use it. And incidentally, during my engineering, we were taught COBOL as one of the core subjects, and we always thought we're never going to apply it. Started my career as a COBOL programmer with HSBC in the payment space, and then manifested, more towards a business-oriented role in payments, trade, and treasury. So last 16 years have been mostly about payments in one shape or form, out of which the last 6 years have been focused more on the distributed ledger technologies and its impact on payments, not just in the financial services side of things, but the broader impact, that you could have in payments more acting as a horizontal rather than as a vertical. So yeah, it was not by choice, but it's something that I really enjoy doing.
I think your career path is probably similar to a lot of ours, so it's good to hear that. Good to hear where you're at. So I won't start by asking what blockchain is, because I think that would take up most of the day and probably into some of tomorrow. But I'd rather spend some time talking about, in your view, what problem do you think that blockchain solves, and specifically and particularly with regards to payments?
So, incidentally, one of the first and foremost use cases that anybody thought about blockchain was in payments, right? So it was about disintermediation of third parties, bringing more trust into the ecosystem, making transactions less costlier, making them more faster, et cetera, et cetera. So it all started with that. But we have seen till date, right? So while it started with that particular use case and Bitcoin brought it to a bit of more prominence than we ever thought, but in the enterprise context of things took a bit of time to realize its true value, right? And today we see blockchain playing a pivotal role in payments in terms of enabling real-time settlements, in terms of speeding up transactions, in terms of cutting down the cost of transactions to as far as possible, and more importantly, enabling cross-border transactions in a more seamless manner. And while I say that, right, it's not fundamentally any public blockchain that we're talking about. I'm still talking about enterprise chains and permission blockchains, which you can fine-tune, in your own context and remit as to what you want it to behave like and what you want it to do like. And I'm more specifically focused on that right now. And challenges with respect to payments in terms of privacy, in terms of scalability, in terms of transparency, in terms of speed, in terms of security, etc., is something that blockchain inherently tackles.
You mentioned at the beginning of your answer about some of the challenges, the latency between the original goals of blockchains and some of the later adoption. I'd like to understand a little bit your view of what some of those challenges were early on and the challenges and how we sort of overcome those, or how, if we see those challenges persist today, and how we're making headway against those.
Sure. So I think, some of the earlier challenges were just to try and figure out what the technology does, right? So it was still pretty nascent. Nobody believed in the maturity of the ledgers. So everybody wanted to first understand what it does and what it doesn't. I did a lot of advisory during the initial days, when blockchain was gaining prominence in the enterprise context as such. And I'm talking about 2015-16 timeframe, when it was at the peak of its hype cycle, if I say so. And at that point of time, it was more about trying to, first understand what the technology does. And nobody really thought about the business application of it. It was more about, oh, yes, blockchain is there. Let me understand what it is. The next phase then transitioned over that while the technology is maturing and in certain areas it was proving its mettle, the the shift was then towards understanding what business problems does it solve and where does it solve. That took a bit of time, right? So, building a tangible business case, understanding what your current systems look like, understanding the pain points of your current systems, and then mapping it what blockchain can do for it or not, right? Took a bit of time to evolve. And I think today we are at a safe place where it's very easy to say that there are tangible business use cases for blockchain as a technology. And we have seen that manifest in payments, we have seen that manifest in capital markets, financial markets, infrastructures, and many other use cases as such. And I think initially the focus was trying to look at, for example, how do we optimize existing payments infrastructures by leveraging blockchain at an infrastructure level. But now we have moved to a point where we have started talking about cryptocurrencies, for example. 6 months, 7 months back, nobody wanted to even talk about cryptocurrencies. It was a gray zone. But now all of a sudden, people realize its value and they're talking about cryptos underpinned by blockchain. And similarly, from a technology perspective, we are not just now focused on the infrastructure and the protocol level. It's more about the distributed applications that you build on top of it that's gaining more value. So I think that's pretty interesting.
Yeah, having been around in some of the early days as well, it was often described as a hammer looking for nails to pound in, and it was just, and I think we've, the session, the where we are now is we're focusing on business outcomes and we're focusing on real problems, and maybe to that end, in your mind, sort of, can you articulate some of those outcomes that for real time payments you see blockchain solving, and I guess importantly, who do you need to be at the table? Who needs to be at the table in order to achieve those outcomes? The community, of course, is very diverse, and it'd be interesting to see, in your view, what that community looks like.
Two parts to it, right? So when you talk about real-time payments as such, I think one part of it is the manifestation of real-time payments in a retail payment scenario. Right? So trying to solve certain problems in the retail scenario wherein customers can pay easily, more interoperably, with lesser friction, essentially. And that's where we saw the evolution of cryptocurrencies and stablecoins coming to a bit of prominence to solve some of the pertinent challenges that we have today at merchant terminals or POS. What we have been more focused on is the B2B side of things. And, particularly with today, where we have a lot of assets on the ledger as of today. So it's a lot of digitally native on-ledger platforms are being built on blockchain. And we talk about capital markets, post-trade settlements, we talk about trade finance, for example, and so on and so forth. So with assets on the ledger, there is this inherent need in terms of now also bringing cash to the ledger to enable faster settlements. And the reason for that is because most of these platforms today, as we know, offer in a cross-border scenario. And while they now do their core business processes in a more real-time fashion, but for payments to happen, they still have to go off ledger and do a payment using their regular payment rail, wait for maybe 2 to 4 days before the actual clearing and settlement happens and the beneficiary gets the payment in their account, which is a big challenge, right? For multiple reasons. One, that obviously it's that endless wait, so you're not able to reconcile your books in real time in terms of the payment from a finality of a payment perspective. But at the same time, with assets on the ledger, wherever there is a pertinent need of an atomic delivery versus payment kind of a scenario, more essentially in an ecosystem which is a little bit more trustless as compared to trusted ecosystems. And ability to have real-time payments is paramount in key, because you now need an ability to, for example, trade a bond on a bonds trading platform. And while as a buyer, I'm claiming a stake to the bond, but unless I make the payment, the bond is actually not allocated to me from an ownership standpoint. In today's world, you keep a lock on that asset for a while the payment comes into an escrow account, and then you manually confirm and say the payment has happened. We're trying to mitigate that problem by bringing real-time payments through blockchain and DLT technology as such, wherein you now have a trade done and you have a real-time settlement enabled and you have a proof of payment coming back on the ledger to unlock the asset fee. I think that's one of the core benefits as to why we see real-time payments as more meaningful as of today. But the broader problems that it solves, to your point, is about transparency, is about speed, is about cost, is about user experience, which it enhances manifold. A lot of corporate treasuries today rely on regular payment mechanisms, so which means they have to rely on the cutoff times of the regional clearing schemes. They have to rely on maybe intraday reconciliation happening through SWIFT, etc. Real-time payments tries to mitigate that problem to a larger extent if we do it on DLT, and basically give them now an ability to be able to reconcile their books in real time rather than the next day. I think that's another value add.
It's interesting. So some of the things you talk about, of course, are inherent just in some of the challenges we're solving with real time and domestically and certainly cross border. Who do you see sort of as you look both, solving those challenges domestically as well as solving them cross border? Because I think there are some distinctions between those two models. Who do you think, like certainly from a domestic point of view, do you see regulators? Do you see institutions? Do you see members? How does that differ from the community that needs to be involved cross border? And how do organizations or what community starts to bring those folks together and bring those organizations together to achieve some of that ubiquity and adoption?
Sure. I think, again, I would break it down into two parts, Shawn. So the first part is, if there's an inherent need of real-time payments for me as an organization, I can still create a sort of a closed-loop payment ecosystem for me and my subsidiaries and my partners, etc., underpinned by blockchain, of course, so wherein you can create a digital currency or a tokenized cash or a stable coin, if you want to call it, and use it for your own purpose. For a finite use case, right? So you can still gain benefits of real time with that to a larger extent. But then there is a broader manifestation of real time payments, which is more at the payments infrastructure level and the regional clearing and scheme level. In which case, it is the regulators who play a very, very critical part. For example, in UK, the Bank of England is now looking at real-time payments. It's a big focus. So we are revamping our real-time gross settlement system in UK, which is CHAPS, making it more 24/7, more real-time, ISO 20022 compliant, etc. But at the same time, looking at building these auxiliary services on top of it, which complement these new age methodologies like enabling delivery versus payment, for example. So from an ecosystem perspective, at an infrastructure level, more if we talk about it in a domestic context, it is the central banks who are taking a lead in it. It is the clearing houses who are taking a lead in it, and of course, the commercial banks are playing along or bringing their perspectives in. The demand, of course, is driven by end users who are corporates, B2B customers. There are a lot of new age technology providers and payment services providers who are coming into purview as well. So it's a mix of all of them sort of coming together and understanding the art of the possible from the next step standpoint.
It's interesting. So, as we go through our own payments modernization journey here in Canada, the adoption of RTR, the adoption of ISO 20022, one of the things that is apparent to us is that, while there's a lot of benefit and there's certainly an enormous amount of opportunity, both from a consumer, an institution, and a corporate point of view, there are legacy barriers. There are challenges not only from a technology point of view, but from an operations and procedure and just an historical. There's been a way of doing things for a long period of time, and there are processes and procedures at organizations that are deeply rooted. So how do you see that as a hurdle? How do you see overcoming that uniquely sort of in the blockchain? Or do you see that blockchain has a unique opportunity to provide a way to overcome that hurdle more so than traditional methods?
To a larger extent, yes, as long as we prove the value of the business case, right? And I think one of the foremost challenges that happened with blockchain and DLT was exactly what you mentioned, that that reluctance to change, the shift from your way of doing things to the new way of doing things. And where a lot of people went wrong was they, to your point, a hammer looking for a nail, they went ahead and said, oh, you today have a legacy technology, replace it with blockchain and you're all good. But that was not the case, right? Because what we were aiming to do with blockchain was more to reinvent the business process by itself. It was not just about replacing the technology. It's not just about taking something out, bringing something in. It's about bringing together a new way of doing things underpinned by blockchain as a technology. And that challenge more or less still persists today, right? I mean, to your point, some of the clearing houses, for example, in UK that we have today, which have been existing from, say, 1968, right? And they have been doing things exactly the way that they started with. They're now looking at changing. So getting them to move is a difficult task. But at the same time, I believe now a lot of regulators, a lot of clearing houses, industry bodies have started realizing the value of the technology, more specifically in terms of how it optimizes and makes their business processes more efficient. Right. And I think that's the value that we are trying to amplify and bring to the table. So my approach personally, and the likes of me, in our organization and otherwise, have been, let's not look at blockchain just as another technology. Let's look at your business process and let's understand how do we make it better for you, but at the same time, how do we make it easier for you to embrace that change, and then bring blockchain underlying.
Yeah, it's interesting. So, and you mentioned in England and here and globally there's an enough, the amount of payments modernization initiative and work going on is tremendous, and it is absolute focus. Do you find the work that you're doing with regards to blockchain in competition with payments modernization, in cooperation with payments modernization, or at the tail end of it? How do you see, because working with ISO, working with your general, moving to RTR systems globally, those are big moving pieces that all institutions and corporations and clearinghouses and settlement facilities are working towards. How do you find the work that you're doing on blockchain manages against all that other work that's going on?
I mean, if we specifically talk about the work that we are doing more in the regulated industries context and in the enterprise context, then I would say it's complementary, right? But obviously, if you look at the wider wild west of cryptocurrencies, and then we know it's directly competing with the existing world and trying to redefine things, I don't think that's realistic and to be able to possibly achieve. So our intention is obviously to work with these regulated entities in terms of understanding what they're doing right now and complement their approach from a transformation standpoint. In certain cases, it might be that if, for example, the RTGS system is undergoing a revamp, and we go and tell them, if you're doing revamp, you don't need to necessarily do it on legacy tech. You can do it on DLT as an underlying infrastructure pillar. But at the same time, that doesn't mean that you would not embrace ISO 20022 standards. You can still do that, right? That doesn't mean you don't have to say, for example, work with Swift. You can still do that. It's just that how do we build the base of the technology pillars to be able to be more efficient and scalable.
Interesting. And so we've talked a lot about some of the legacy and the adoption hurdles and challenges you're seeing sort of in the adoption of the blockchain. Can you talk a little bit some of the other hurdles you're facing? So you touch on regulations, but it'd be interesting from a global point of view where you're seeing some regulation, either challenges, opportunities, or where you're seeing some consistencies or inconsistencies would be helpful, and perhaps some of the other more socially impacting challenges, such as the energies, which I think that is top of mind for folks, and that will continue to be a conversation. So can you talk a little bit some of the other hurdles and challenges you're facing and how you're seeing those handled globally?
Absolutely. I think there is obviously this sort of a myth that blockchain consumes a lot of energy and it's not good for the environment and so on and so forth. To a certain extent, it's true, but it's true for permissionless chains like Bitcoin, which are compute intensive, rely on mining, and so on and so forth. So we have to really prove the value of, doing something on blockchain versus the amount of energy it consumes to be able to do that. But when we are talking about enterprise blockchains, and for example, Corda from R3, which is a platform, we are designed to be efficient, right? So in fact, one of the papers that we recently did, we talked about how running your core payments processor or business processes on a mainframe versus running it on R3 Corda as a platform is better, because we are less compute intensive, less energy intensive as compared to what mainframes do, right? Because as of today, your legacy tech, when your mainframes are running and they're computing, they're consuming energy. But when they're sitting idle and doing nothing, they're consuming more energy because you need to keep them up and running, maintained, cool, and whatnot. Blockchain does not need all of that, right? So you can break that paradigm down to a level wherein you bring about more energy efficient systems into the workplace. We're also now looking at permissionless chains from a blockchain standpoint, and there's a lot of work going on in terms of understanding, for example, how do we change the underlying consensus mechanisms so that the compute requirements are lowered, which means the energy consumption is lowered. So in public chains, moving say from proof of work to a proof of stake kind of a consensus mechanism is something which is being explored as well on the energy side. But from our perspective, I think we have a very clear view on this. Enterprise blockchains, permission blockchains are not as compute intensive as we think. They're going to help you lower your carbon footprint rather than increase it if you do them right and if we implement them to the right place. So I think we are trading it that way. In fact, today, a lot of organizations and banks and FMIs in particular who we work with are actually looking at building ESG solutions on blockchain, right? So they're building carbon trading platforms. We're building liquidity marketplaces, for example, for green bonds, etc., on the ledger, proving the point that we can be more efficient than existing tech. So I think that's how we try to cover that point.
Interesting. I think it is. I think there is some myth busting to be done and some settlement. There's some consistency to the messaging that's going to take some time. But coming back to the regulations, I'd be interested, and maybe you can tie us together. Sort of, we've got a we've got a global community at different stages in their modernization, and we've got some countries that are certainly farther ahead than other countries than Payments Canada, or Canada, for example, in the middle of its payments journey with the introduction of RTR and RTGS on its link system. I'd be interested to sort of see, where are you seeing more adoption globally or more interest globally? Are you seeing specific jurisdictions? Are you seeing those jurisdictions based on the demographics, or are you seeing them based on their journey in the payment modernization, journey?
Sure. I think there definitely is a bit of a regional sort of a view in terms of who's taking the lead in payments modernization. I would say APAC has stood out because they've done tremendous amounts of payments modernization. UK has done quite a bit as well. US, as we all know, is lagging a little bit, in the payments innovation and modernization at an underlying infrastructure level. But more importantly, what I think now is, while we were rather initially focused on the regional real-time payment systems, right? How do I make my domestic payments better? And a lot of countries moved ahead and transformed their payment systems. For example, countries like Singapore and India, UK, and with the work that you are doing in Canada. So we are ahead in the journey in terms of realizing that vision. But the shift that we now see from a regulator's perspective, and also from the domestic clearing scheme standpoint, is to understand how can I connect my regional real-time gross settlement system or a faster payment system with another country's real-time gross settlement system or a faster payment system. So one RTP to another RTP, so that if I'm now doing cross-border payments, they manifest as good as a domestic payment, between these two countries. And that's good to see, right? So because we are moving towards that direction. And we saw some good examples of that coming out, for example, from Thailand and Singapore. The Monetary Authority of Singapore actually put together a project wherein they connected the faster payment system in Singapore with the faster payment system in Thailand, and executed a cross-border remittance using these two locally disparate faster payment systems. That's the evolution. So what we are now looking at is, while you can still while you transform your existing regional clearing schemes and you connect your regional payment systems, together, can we look at blockchain and DLT as an underpinning lever to be able to do that, right? So which means a better infrastructure, more resilient infrastructure, etc., and also bringing a lot of other players into the ecosystem to be able to manifest and provide that end game, from a transaction finality standpoint.
And are you seeing, so as you bring those jurisdictions and those countries that are farther along in their journey, and they've made decisions and they've made architectural implementations and they've got a community, are you seeing challenges as they approach the blockchain, the cross-border, the connecting the two RTR systems? Are you seeing challenges with those environments that we could potentially look to solve or could accommodate for those countries that are earlier in their journey?
Yeah, absolutely. There still are challenges, right? So there are challenges in terms of scalability and resiliency, etc. But more importantly, there are also challenges in terms of how do you integrate, right? And what kind of an ecosystem do you need in place in terms of a payment to manifest from one end to another? So we have a view in terms of, for example, can we create a new ecosystem or a new infrastructure which has, say, instead of correspondent banks, you have a sponsor bank and a liquidity provider sitting in between at both ends, which enable a payment to happen more seamlessly, more like a local payment. So, for example, if I'm making a payment from, say, Singapore to Canada, I have a sponsor bank in Singapore, I have a sponsor bank in Canada, I have a liquidity provider sitting in between who's actually giving me Forex real time for this payment to manifest, while the Forex settling between the two banks can happen maybe on the 2-day timeline, as happens today. But in terms of providing liquidity to fund that transaction in real time, I think that is something that we are looking at. And that's one of the challenges existing systems would find difficult to solve. With blockchain, we can hopefully solve that more easily.
Excellent. Okay, so and I guess the sort of wrapping it all together, and talked a lot about where we've been and sort of where we are in different jurisdictions globally. Where do you personally, I guess, and also from R3, where do you see, or where do you hope to see the sort of the use, the world, I guess, in 5 years, with regards to blockchain technology in both domestic and I'll make it topical for us. Where do you see hopefully blockchain being used cross border, but domestically in Canada? Where do you see the opportunity, and where do you hope to actually see the implementation?
I think I would say the opportunities are in three areas broadly, right? So let's take the first one, which is using your existing RTP infrastructure and building some overlay services on top of it to make it more blockchain accessible or blockchain friendly, wherein your local regional RTGS system can now be used to facilitate a delivery versus payment kind of a scenario. And if you look at what Bank of England is doing right now, so while they're doing their RTGS revamp on existing legacy tech, right, even though they're making it 24/7 and ISO 20022 compliant, but still on legacy tech, but they realize very soon that they need to build these auxiliary services on DLT and blockchain to be able to be more meaningful and more viable from a B2B payment standpoint. So today we are talking about a scenario wherein you have a asset network on Ledger. For example, let's think about it, a property real estate platform being built on Ledger. And interestingly, there are a few being built on Corda today, which are in production. And now on this particular property network, if there's a buyer and a seller executing a sale deed, but now a payment needs to happen, can we actually connect this new age digitally native property network with the real-time gross settlement system directly, wherein through commercial banks, that as the payment happens, the RTGS system actually provides you a proof of payment back onto the network for you to release your assets or the sale deed. Right? I think that's an evolution, and that's a use case which I see in the next 5 years would largely be underpinned by blockchain, and most of the regional systems would, transforming regional systems, hopefully would evolve to that. Another use case where blockchain brings a lot of value is, of course, about stable coins and tokenized cash. So giving you an ability to create your own currency or a coin in a regulated fashion, which could be backed either by central bank money or commercial bank money, but which is more programmable and which can be used in a context as you deem fit, is a use case which I see much more adoption happening earlier. So possibly in the next 2 years rather than in a 5-year spectrum. And then the third use case, and more importantly, which we all know about, is the CBDCs, the central bank digital currencies use case, which is underpinned by blockchain as a core technology. And I think that has that time frame of around 3 to 5 years before it becomes mainstream, at least in the wholesale scenario. So I would consider in the payment space these three main areas where a lot of evolution would happen. We are also hoping that blockchain can potentially become the infrastructure on which various RTP systems would connect with each other. So already some pilots, POCs are being executed in that space. So that might be another use case in the 3 to 5 year spectrum that we can see play out.
And so, and it's interesting. You talked about, earlier in our conversation, you talked about changing the correspondent model fundamentally, right? Changing the way we view correspondent banking today. And I think there's a lot of opportunity there from a speed and efficiency point of view, and certainly from an operations. But it's going to require a lot of the stuff which you talked about just now, and CBDCs and the regulations and so forth. There's a lot of coordination between the central banks and between the regulators. How are you seeing that evolve today, and how are you seeing that cooperation either struggling or succeeding? And where do you think that there's opportunity there?
I think right now the central banks are more focused in terms of understanding within their given context or within their remit in terms of what is out of the possible from a CBDC standpoint. But we have now seen that willingness to explore cross-border implications of CBDC, where central banks can coordinate and work with each other to understand the bigger out of the possible. I'm personally not very deep in the CBDC space, but what I have seen from an outside-in standpoint is it's moving in the right direction. I won't say that harmony is excellent right now, wherein central banks have already started talking to each other and understanding what they can do. Because right now, most of the central banks are still trying to do some POCs, pilots, run some execution methodologies to understand where they are. But surely in the next few years, we'll see that happening as well.
think that makes sense, and I think there is an evolution there. There's some building blocks. We need to take care of our house internally, and then see what that happens globally. So your vision of moving towards or modernizing or changing the domestic or sorry the correspondent banking model over time. How long do you see that taking? Do you see that as a coexistence forever? Do you see as the old model just eventually being eroded because of the efficiency and value, or do you see that sort of taking a generation to move?
I think the old model would evolve, right? We all know that it's not a very efficient model. You lock in capital, you have operational inefficiencies, you need nostro reconciliations, so on and so forth. So that model is going to evolve, and we have already seen some bit of traction in that, right? So if you see these new age payment services providers who have come before, like the Stripes and the Rapids and Niems and Modelers and others of the world, they today provide cross-border remittances through local accounts and local currencies, right? So without necessarily having a corresponding chain, but more providing you a global multi-currency wallet that you can use to transact in the B2B context. And we have also seen banks like HSBC pivot towards that, wherein they recently rolled out a global multi-currency wallet for their corporate customers, where you can pre-seed your wallet and use that for transactions more like doing a local account transaction. So that model in it by itself is getting redefined in a lot of ways. With blockchain, it'll take it a step further, right? So it'll take it a step further in the sense wherein we would still need some entities like commercial banks and payment services providers and payment rails to play a certain part in that broader change, but it'll be more efficient. It'll be more optimized. It'll hopefully not lead to a liquidity lock-in. It will not lead to your capital being locked. Your reconciliations from your accounts perspective would be real time rather than next day reconciliations, so on and so forth. I think that's the efficiency that DLT would bring together in that space.
Excellent. Well, thank you very much, Muneeb. I think we've had a fantastic conversation. I appreciate your insight. It's always great to have a view from abroad, and to really bring some value to the summit session. So I want to say thank you very much for your time today. And if there's any other closing comments you have, I give you the opportunity to say so, and before we close off.
No, thank you so much, Shawn. I enjoyed the conversation as well. I think all the points that we discussed are very pertinent, with respect to what we are all trying to achieve. I think from a conclusion standpoint, I would just say that one thing is very important, that we do not need to really look at blockchain, with the lens of being compute intensive, with the lens of being only related to cryptocurrencies. We also need to be looking at it in terms of how it amplifies and aids the current business processes, and how it can possibly change the underlying infrastructure as well from a payments clearing standpoint, to bring more value on board. And we are seeing some positive trends there. It's heartening to see that we are now seeing increased focus with, for example, some of the largest banks using our platform, R3 to issue their own respective coins, stable coins, which they use for intra-branch settlements, right? And cross-border, that too. We have also seen a lot of use cases manifest at the clearing level, regional country-based clearing level, wherein they are now looking at blockchain and trying to understand what it can do. So I think that's great. So net moving the positive direction. We're all looking forward eagerly for CBDCs to come through. And the important point there would be how interoperable those CBDCs are with what we are trying to do today and what we are trying to do with stablecoins. We have also been focused on bridging that gap between these digitally native networks on Ledger and existing payment fiat rails by providing a connectivity wherein you should be able to initiate a payment from the Ledger, not necessarily in the form of a token or a crypto or a stable coin, but more like ISO 20022 payment transaction that you can create and send it to a backend payment services provider who can make that payment happen and give you a proof of payment back. So all these areas pretty interesting, keeping us tuned in, and more to come, hopefully in future on this.
Yeah, and I agree. And I think, I'll come back to my earlier point. I think, we're all working so hard, and we're also laser focused on the amount of work on payments modernization, globally on ISO. And it's easy to sort of try to push things aside that seem distracting. But as you mentioned, there's real value and real business problems we can solve, and it's important for us to sort of keep those in mind especially as we see CBDCs coming. We see the world evolving regardless of the work we have on our plate. It's really important that we don't just discount the fact that these are important business problems we can solve. So I appreciate your time today.
Absolutely. Thank you so much for your time as well, Shawn.
Great. Thanks very much, man. Have a great day.